Good afternoon, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures in Chicago on Thursday, October 7th, here in the afternoon with some commentary in the energy markets. So let's get started. What do we have going on here today? Well, crude has basically mostly been lower, although we did get a little bit of a push up earlier today. We're off about 52 cents. We're trading around 94.27. That's the December oil contract. And you take a look at how we've been performing here. Yesterday we got a really nice surge higher, and we're kind of easing back here a little bit. And I'll touch more on that in a minute. Taking a look at the Brent. Brent's off a little bit more than that. Brent's off about $1.62. Still looking at that December contract there in the Brent. We're trading around 103.62. So we're seeing that spread kind of narrow in. If you're interested in learning how to play that spread, give me a call or shoot me an email. Talk a little bit more about that. Nat gas a little bit firmer. We're up roughly about 2 cents right now. Complex coming under pressure. We're off about 3 to 4 cents there. So you take a look at what we've got affecting the markets here today, and S&P was quite a bit firmer here this morning. That's kind of pulled back a little bit. We got GDP numbers out this morning, of course, weekly unemployment numbers, and GDP came in a little bit stronger than expected. Kind of helped an initial surge there in the market and the equities market. That kind of fizzled out. A lot of people are waiting to look at the labor report here tomorrow. So that's kind of going to be the big one. But taking a look at the oil market here, yesterday we did get out those EIA numbers, and if you recall, I spoke about that earlier in the week here. We're looking at the API on Tuesday. EIA came out yesterday, and there was a build in the stockpiles. Surprise, surprise. But here's what you got to remember, though, is that while there was a build, it was a smaller than expected build. So we did see the stocks rise there. Saw a build of about 1.57 million barrels. So total stockpiles right now are coming in at around about 385 million, a little over 385 million barrels. And that's a substantial amount of oil. That we're over 10 million barrels higher than what our highest stocks have ever been for this time of year. 5-year average, to keep it in perspective, is right around about 345 million barrels. So we're running basically about 40 million barrels above our 5-year average. So again, something I've said in so many of these posts, supply side seems to be more than ample. And the demand side, questionable still. Now that GDP, for third quarter there, like I said, we saw an improvement there. So things could be improving there a little bit, but not enough, I think, to get all excited about oil and start buying it up here, because again, we still have a lot of oil out there. Now, interesting to note here, capacity utilization up a little bit here for this time of year. We're running at about 86.8 versus last year coming in around 85.4, but even this 86.8 number still has room for improvement. So if we start to see that number kind of, jump up there a little bit, we could see a little bit of draw there in the stockpiles, but still that remains to be seen. Looking at the technicals, I think, short-term technical indicators still very oversold. Now, what's interesting is you look at the price action here today, and although it's been a pretty well-traveled range, so far today's trading range fits inside yesterday's trading range. So that's referred to as an inside day. So for those of you traders that don't know how to play an inside day or what to look for there on the setup, there's an excellent trading opportunity that presents itself with inside days, not just in the oil market, but in a lot of these markets. Give me a call and I can explain that to you on how you can potentially play these inside days when you see these types of setups. So generally what it does mean, though, is that we're seeing some consolidation here in the market, and I think that oil market's getting ready to make a move. Now, as many of you know, I am, and I have been here, as you can, those of you that have been watching my posts here, I've been somewhat bearish there on the oil. I still remain long-term, a little bit bearish there on the oil. But I think here in the short term, oil could be ready for a small pop-up, possibly targeting around the $96 range. And so that's kind of what I'm looking at here right now, short of seeing any new fundamental developments in that market. Got some ideas and some strategies here for playing January oil options. If you're interested in hearing about them, give me a call. I'll talk to you about them. It's a ratio spread. I'll go over the strike prices with you, mechanics of how that trade works. It's a very interesting concept for those of you that don't know what a ratio spread is or how to play those. I'd encourage you to give me a call so you could learn about this very powerful, potentially powerful trading strategy. At any rate, give me a call, shoot me an email. We get into more detail. Of course, remember that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.